Happy Friday, the DXY showing some major potential reversal signs. So we're going to get into that today. Much jam-packed information for you as I can without all the fluff. So hit the like button if you haven't already. Let's get right into it on the daily chart. What have we seen lately? So you might notice we're at under 107 as of recording and dropping day over day for the past couple days here. So we're going back all year, we have not broken this 100-day EMA. That's the blue line. So good signs here if you want the risk on assets like crypto and the stock market to continue to trend up, and you want the bull market, the major bull run of the DXY to end. The signs are here on the daily, but that's not enough. We need more signs. But last week we made a video, maybe 2 weeks ago, looking at the first time in over 500 days. We put in a lower high and then followed by a lower low. And that was at least a warning sign of potential disaster for the DXY. And we're seeing that play out right now. So if you haven't seen that video, go check it out. We're calling it before any of this happened. So let's now zoom out to the bigger picture and see if we can spot anything else, because the bigger the time frame, the weekly is bigger than the daily, right? Obviously, but if you can find it on the bigger time frame charts, that should have much more significant impact of what's going on. So now the weekly, this is going back. Here's 2021, right? Here's 2020, our beloved pandemic era right here. But since the bull run for the DXY started in kind of May of 2021, right here. And that's kind of when crypto, if you remember, May of 2021 had its first major drop in a long time. Having said that, you want to look for things that haven't happened in a long time to start to get like the crack in the ice for the trend macro shift. And I mean, it should be staring you right in the face here, right? We're now moving down. One of our biggest drops in 18 months here for the DXY on a weekly time frame, coming in hot to the EMA 34, the orange line, 106.46 as of right now. We'll see if we bounce there or we reverse here. To really get a sign, right? TA is only useful not to predict, but to help you get just a step up on what potentially could happen. TA is not used to predict prices. Nothing is predicting the future, right? Anybody that says different, blatantly wrong. So let's go back and look at any kind of previous moves that are like this in history, right? This, not so much, right? We want like parabolic move up, and then let's see where it kind of landed or drew random lines. So let's get the cursor back on, and then we can move the chart. Do we see it yet? Not really. How about that right there? Look at this move up. 2014, the bull run of the DXY, looking very similar to current bull run, right? And what do we do? On the weekly chart, we broke through all our moving averages after making a super move up, right? Put in a kind of a lower low or a lower high, I should say. Broke down past the 21 week and just shy of the EMA 34. Then we had a bounce, right? So if we get a bounce currently, right, we're just shy of the EMA 34. I mean, so far we're rhyming pretty close to that. So if we get a bounce here in the next week or two, then I would expect crypto to have a little bit more of a drop, right? The next couple of weeks, you shouldn't be really concerned about. We're looking at macro trend shifts, and we're looking for the DXY to really start to break down. So if we get a bounce, we want to look for, obviously, a lower high. We want to put in something, the highest close we have right there. We closed at 113.29 on the weekly. So any kind of close, if we bounce, we need to be looking for less than that, okay? That's step one, right? Step two maybe. Step one was breaking a big moving average, and we're doing that right now. So we close this weekly candle today. The DXY closes on Friday. So 8 hours, depending on when you're watching this, you might already know where we close. If we close under the EMA 34, amazing. That would be a super breakdown. Although that's probably not the odds. I would say we probably close somewhere around here or a little bit higher even, right? Just like we did back in 2014. So we'll see, right? 8 years ago was pretty crazy. So we'll see if we do that and we start to bounce next week, then we want to pay more attention back to 2015 or 2014, 2015. Well, what did we do here? Okay, so we'll try to look at that. Now, let's move out to the bigger picture, the monthly, and then we can start to really paint a kind of macro sentiment here. So moving down to the EMA 8 on the monthly. How about what did we do in 2014? We came right down to the EMA 8 on the monthly and then bounced and even closed, about 4% higher than this, right? Than the moving average. So we'll see how we end up doing. We have 19 days, 9 hours until this closes. So will we bounce in the next couple of weeks and rhyme with this again? Then we need to be watching. What else did this do? This actually went up and almost double topped here, right? It closed higher, but it did not ever get above that level. So we need to be watching for that as well. Nice W pattern on the monthly printing out and, playing out really good here. Oftentimes when you break that, you're going to really lift off, and that's what the DXY did. Now looking at that, right, you can see obviously still bullish until we start to break the bigger moving averages. That's what we need to do. So, maybe we're here, maybe we're already here, right? We'll have to see how this monthly candle closes. You don't want to try to rush to predict what's going to happen. You need to wait for the candle sessions on each chart to close. So if you're looking at the hourly, don't try to predict where that hour candle is going to close. Wait for it to close, and then you can, do with what your data that you want it to do. So we're moving down right now. We want to see it close under 106.50. And that would be, pretty good sign. And you'd like to see it with conviction. So if it wants to close under 105 or something like that crazy, then we have more to look at the next video. So stand by for that. We have 19 days, 9 hours. Now, if you're still watching, I like to give a little bit of bonuses for people to watch longer. So let's look at something different. So the monthly DXY, right? This is a regular traditional candles, which I'm sure most of you are aware of. What you may not be aware of yet is Heikin-Ashi candles. They show you the momentum. These are different than the regular traditional candles. So whatever side the shadow is on here is the momentum side. And as you can see, the DXY on the monthly has had nothing but upwards momentum for the longest time, basically since it started its run, right? And if you haven't seen the elephant in the room yet, I invite you to Exhibit A. The Heikin-Ashi candle is not only showing signs of weakness, but the bears are fighting very hard to pull the DXY down here. So these are not, like I said, don't think of these are opposite of traditional candles. This would look bearish, right, with the up thrust here. But it's quite the opposite with Heikin-Ashi. It shows you the momentum. Whatever side your shadow is on is where your momentum is. And as you can see, for the first time, going all the way back to June of 2021, we are getting indecisiveness, and we're getting a major fight out of the bears to flip this back around and really start to, 1-2 punch Mike Tyson, the DXY in the mouth. So worth noting this. We still need to wait for the candle to close, but that's what you want to look for major macroeconomic shifts, is something that hasn't happened in a long time. And on the biggest scale is the best scale. And the monthly DXY chart is showing some major potential reversal signs. So worth noting, wait for the close. We'll see what the December 1st holds for us. But that's the signs that keep you a little bit ahead of the rest of the people that are in ultra fear, right? I'm not saying everything's going to happen the next day or two or even 2 months, right? These things take time. It takes a lot of time to turn the Titanic around, right? Hopefully you've already passed the icebergs, or maybe the DXY is heading right into it. I don't know. So my point, the times are here, right? The mass fear, the pandemonium, right? That happens every bear market. There's always something that's seems like it's the first time for everything. This time is different. Oh my gosh, the world's going to hell, right? Financial disaster everywhere, rampant. These are the times. Now for the next 2 days, 2 weeks, 2 months, who knows? Anyone's guess is as good as the next. But these are the signs that where we could start to accumulate here, right? You're going to be well ahead of the majority of people that are just too scared to do anything. So anything could happen in the next couple days, couple weeks, maybe even couple months because of the FTX things that have ensued, because of all of the global things going on right now. And this is certainly going to have an effect on crypto in the near term, but long term, right? If you're focused on, 2025, the next peak, buying at these prices, at least start to dollar cost average, right? Never a bad idea. Not financial advice, obviously, but buying when everyone else is, pissing themselves is usually the times where you'll think back at and be like, wow, I did pretty well back then. So just trying to throw that out there. What do you think? Are we shifting? Is the DXY getting ready to roll over here? Or is the Heikinashi full of shit and Japanese don't know anything? All right, I'll leave it to it. For the 4 of you that watch this video, appreciate you. I'll see you in the next one.